think Amazon just saved the stock market. A complete U-turn here after hours, after Q4 earnings reported. 17% up at the moment. This is crazy. We have to dive into, see what investors see that, let them be optimistic again after the horrific earnings report from Meta Facebook yesterday that we've seen. So obviously today the stock dropped 8%, but now after hours on those earnings, it's up 17%. So let's get straight into Amazon's earnings. So they reported a 9% sales increase in the fourth quarter, and a big profit gain on the Rivian investment that they have. So basically, so CNBC here says, Amazon on Thursday said revenue climbed 9% in the fourth quarter, and the company reported a gain of almost $12 billion from its investment in Rivian. Stock popped in extended trading, which is still going, like it's going up by the second. So earnings per share were coming in a massive $27.75 per share, which I think the expectation was around $360, $370. So that obviously comes from that huge gain on investment since the IPO of Rivian. But we'll dive into the numbers a bit later here. Revenue top line, 137 billion, kind of in line with expectation. The same with the AWS revenue as well. So yeah, but still, if that is so in line, so what caused the pop after hours? So we have got the earnings details here, just released by the company just a few minutes ago, actually. When you look at the first few points, you're actually thinking, so wait a second, this sounds rather negative. So operating cash flow decreased 30% to 46 billion from 66 billion 12 months ago. Free cash flow also decreased to an outflow of 9 billion compared to an inflow of 31 billion from last year. So if you just read this actually sounds much worse than Facebook's earnings. Facebook's free cash flow dropped from 12 to 10 billion, but still positive. So that's kind of weird when you see those headlines at first, right? But basically what that means is there's an adjustment that they make here to free cash flow. Less the principal repayments of finance leases and finance obligations decreased to an outflow of 20 billion trailing 12 months compared to an inflow of 20.3 billion for last year. So actually we're up, but due to a sort of an accounting, accounting thing that you have to record the leases like that, this is showing as such a large outflow. The free cash flow less equipment, finance leases and principal repayments of all other finance leases and finance obligations decreased to an outflow of 14 billion trailing 12 months compared to an inflow of 21 billion to the trailing 12 months. So all those leases and principal repayments there, they have definitely an impact on the numbers. But yeah, if you normalize it, we are actually in line with the free cash flow numbers. I think what investors are really excited about is this here. So fourth quarter 2021 net sales increased 9% to 137 billion in the fourth quarter compared to 125 billion in the fourth quarter 2020. And why this is such a big deal, if you think about it, to fourth quarter 2020, that was after the big reopening. There was a huge surge in shopping and going out and ordering a lot and buying a lot. That was like at the peak of, when people bought everything online and they made a huge gain in that year. So in order for them to compare to that year and be still up 9% is just massive. That just basically shows that even on this record quarter or record year last year, they've increased their sales another 9%, which is just amazing. So this is that. Operating income decreased 3.5 billion compared to 6.9 billion in the fourth quarter. So we have to look into that. Net income increased to 14.3 billion in the fourth quarter, or $27.75 per diluted share, compared to 7.2 billion or $14 diluted per share for the fourth quarter last year. Basically, the reason here is a massive valuation gain of around $12 billion from their common stock investment in Rivian Automotive. So if you haven't followed that, it's a huge deal that Rivian IPO this year. And obviously Amazon got into it early when they were not even listed. So but simply by listing on the stock market, the stock has gained, massively in market cap, and Amazon as a stakeholder here was definitely a beneficiary of that. So this is why, if you look at the earnings per share, you might think, what the hell happened? Like, how are they able to 4x their earnings per share, or whatever it is, the number. So it's insane. But if you normalize that, so you would have to take that out. So if you say, okay, 27, so 6 billion, the net income 14 billion. Last year it was 11, what was it last year? 7 billion. So still we're quite up there, but yeah, you have to actually think about, actually, if you take that off, we're actually down. So we're basically saying 14 billion minus 11.8 billion. So we're actually down to almost like 1 or 2 billion compared to a 7 billion. So this is what, when we look at the beginning here, operating cash flow decreased 30% and so on, free cash flow decreased. So this is actually the impact here that we also see in the net income. So now that headline makes sense here, right? But we do see that there's been some other investments. So free cash flow, which is the actual money that came in, was strong and was comparable to last year. On top of that revenue increase. And so the question is, when they increased revenue by 9%, how come free cash flow is still the same, right? So, but we'll get to that later down there, because obviously there's a macroeconomic thing going on with, higher costs for labor, higher inflation overall in the market, and higher, costs for like all the supply chain logistics, which Amazon is obviously highly affected by that. So I guess that's the reason why we see compressed margin on the bottom line. For the full year, net sales increased 22% to 470 billion compared to 386 billion in 2020. So this is obviously amazing. But a company the size of Amazon growing at a 22%, I mean, that's just crazy, right? That's just insane. They're like almost $2 trillion company, and they just grow at that rate. This is just fantastic. So then the CEO has a comment here saying, thanks to all the employees during this hard times, blah, blah, blah. We say, okay, we do see, as expected over the holidays, we saw higher cost driven by labor shortages and inflationary pressures, and the issues persisted into the first quarter due to Omicron. So this is definitely having extended issues on, supply chain, inflation, labor costs, because whenever there is sort of an outage or the economy shuts down for a while, then, supply shortages is not going to get any better with additional Omicron cases and additional shutdowns and whatnot. So, but yeah, massive growth here, extraordinary growth in the Amazon Web Services. So the cloud business, 40% year-on-year growth, now at a $71 billion revenue rate. I mean, think about it, 71 billion this is for the year. So we're looking at, it's out of 71 billion out of 470 billion. So it's just getting a massive share here. So from the business. So what is that? That's so we're getting 15% now from the Amazon Web Services. So it just keeps growing at a massive rate. And obviously the Amazon Web Services is not affected by anything like the labor shortage, the inflation pressure, the supply shortage or whatever. It's the software. So you have strong margins there as well, which definitely helps at the bottom line for Amazon here. So we do want to see that growth happening. Then the other thing that they're calling out here is obviously the Amazon Prime keeps performing pretty well with new additions to the offering of Amazon Prime, new series and new shows and so on. So they say that Amazon continues to heavily invest into Prime. In the last few years, Amazon has added more production selection available with fast, free, unlimited Prime shipping, more exclusive deals and discounts, and highly qualitative entertainment, including TV, movies, music, and books. So, in terms of Amazon Prime, another big news here is that we have, obviously, for Amazon free shipping, we have increased over 50%. This is insane. And members have saved billions of dollars of shopping on Prime Day. And what they've announced with this popularity, obviously, they can control the thing. So this is what, Apple is doing. This is what Microsoft is doing. This is what Salesforce is doing. This is what all the big companies are doing that have a superior product. They're able to just, because it's so popular and it's so kind of considered necessary by a lot of people, they're just able to raise the price. So they're going to raise the price now from $13 to $15 on a monthly fee. And for annual memberships, they're going to raise the Amazon Prime membership in the US from $119 to $139. So just think about that growth rate, that massive growth rate of Amazon Prime plus the increase in membership. So that's just going to show you that, we do have that strong growth already now without that increase. So with the increase going forward, Amazon is simply like able to completely outpace these like inflationary pressures, these whatnot. So I mean, if you think about that, right, 139. So this is a $20. It's a $20 increase. So $20 out of 108. So they just increased by 17%. Like inflation is maybe like at around 6-7% at the moment. Might even drop down. Who knows? But if it drops down, it would be even better, because they're not gonna go back from 139 and say, oh, now it's suddenly 119, unless no one's gonna buy it. But I do think they've done their research enough to know that this price will work, and obviously then this just shows investors that going forward they were able to increase their revenue, outpace their increased cost for operations. So and I think this is just why we see this massive uptick right around 17% after hours at the moment. Cool. Let's go to the other highlights. Shopping. Yeah, big Black Friday, Cyber Monday is always obviously a thing. Biggest ever this time. Yeah, Prime membership. I'm just browsing through to see if there's anything we need to really call out here. But they're obviously going through all of the business services. So I do think from a numbers perspective, we're all good. We've gone through the highlights. Another thing that happened, I just saw that's like massive up run on Snapchat. So obviously Snap and Pinterest, they're also reporting along with Amazon. I just saw this happening right now. That's crazy. Snapchat and Pinterest, I think they're both reported massive numbers. Surprising to the upside. So Pinterest up 28%, Snapchat up 42%. Amazing after hours trade here today. I mean, this might have just reversed the whole crash. I mean, I'll have a look into. Let's have a look into after hours and to see if there's anything happening with all of the other stocks. So let's see. I want to see if that has an impact on Meta. Although the earnings were really bad, so I wouldn't be surprised if there's not much. I mean, it does tick up. So, and things like, let's say, Palantir, for instance. Let's have a look at that. Up 3%. So it does. I do think that's a good gauge. Always Palantir, because it's a high growth, high risk stock. So if that's up, that means basically, they do have a huge positive impact on the market. So we can expect the market to do a sort of a U-turn tomorrow morning. So yeah, I hope you enjoyed this update, and see you next time for the next one.